2022 proved to be a year that most businesses battled with increased costs. Inflation of goods and services was a significant factor in rising prices, and many blame it as the culprit to the squeeze on the bottom line for many business owners. As an insurance agency servicing businesses across the country, we are now warning our clients to expect increased insurance costs in 2023. Now, in today's video, I will explain the reasons for the increasing insurance premiums, and I'm also going to give you some tips about how to continue to protect yourself and potentially save on costs when prices go up. Hey guys, so the harsh truth is that we expect insurance costs to increase across most markets in 2023. In 2022, we witnessed increases in some lines of insurance, such as property coverage, automobile insurance, especially business automobile, and certain liability products such as management lines, EPLI, directors and officers liability. But in 2023, unfortunately, we think insurance premiums are going to rise across all types of products and lines of coverage. We don't think any product or line of insurance is insulated from these economic pressures and these macro level conditions that will affect insurance companies. When we start to talk about the reason for rising costs, the simplest explanation is inflation in goods and services have caused insurance companies to spend more money on claims, cost to repair, cost to replace, and insurers have had to really act quickly because the amount of inflation has risen at a level that economists say hasn't happened since the early 80s, so it was rapid, and insurance companies had to react quickly by increasing their premiums to keep up. But a lesser known trend, and is starting to affect us now in 2023, is social inflation. So social inflation trends that impact insurance costs include increased litigation, plaintiff-friendly legal decisions, higher jury awards, and a broader interpretation of insurance policy language. Let's start with increased litigation. Litigation funding. You may not have heard about it. Definitely an area that you need to be informed about. Litigation funding occurs when a third party provides resources to attorneys to finance a lawsuit. In exchange for these resources, the third party will receive a portion of the settlement. We equate it to investing in a legal matter. It's kind of crazy, but this third party is giving funds in hopes of a larger return. Litigation funding is increasing the cost of litigation because plaintiffs can take cases further and pursue larger settlements, and that directly impacts insurance companies, especially on the liability sector of the business. Payouts coming from third-party injury, third-party claims, bodily injury, property damage. Higher settlements, bigger payments, cost more to settle, cost more to defend. So number two, tort reform. We refer to laws that are designed to reduce litigation as tort reform. And the purpose is to prevent frivolous lawsuits and preserve laws that prevent abuse against businesses. Many states have enacted tort reforms, leading to fewer claims and punitive damage caps. Here's the problem. In recent years, opponents have challenged tort reforms, believing that lower settlements cause attorneys to take on fewer cases, thus causing injustice in the system. Problem is, if tort reform continues to erode, there could be fewer restrictions on punitive damage and non-economic damages, which drive up the cost of claims. 3. Anti-corporate culture. People not trusting corporations. Increased distrust. Why? Highly publicized issues relating to privacy and data mishandling. These types of issues impact perception. So when the cases go to court, juries are more likely to sympathize with the plaintiff. The compound effect leads to higher jury awards and nuclear verdicts, which have become the new norm. How can you protect your business and prepare for rising costs? Remember, insurance is a cyclical market. Like any free-forming market, there are going to be times of hard and soft market periods. We always remind our clients, take advantage of the soft market periods. That's gone on for the last 10 years. A lot of insurance products have been soft in a buyer's market for a long time. Premiums are lower than we've ever seen before. Those are times you have to take advantage. With the soft market, always comes a more challenging period. Now, in my 20 years in the business, I can't say I've witnessed so many forces at once, pressuring insurers at the same time. So I want to give you a few tips to protect your business and prepare for rising costs. Number one, do not trade coverage for cost. Remember, no two insurance policies are identical. A lot of times when you're presented with savings, you're also giving something up in your protection. Now, if you know what that is and you understand it and you're okay with it, that's one thing. But don't think you're buying something at a lower cost that's just as quality as the product that you're trading it for. Don't decrease your insurance limits, especially your limits of liability. That goes for your auto limits, your personal liability limits, your general liability limits. Don't lower those limits to lower your premium. If you have some more adversity to risk and you understand the ramifications of higher deductibles or self-insured retentions, that could be a strategy that you employ. If you're more averse to risk and you understand the ramifications of higher deductibles or self-insured retentions, that could be a strategy to look into. But do not lower your limits of coverage or remove coverage to save money. It could be a detriment to your business. Number two, consider an umbrella policy. You're probably saying to yourself, now you're telling me to buy more insurance. I am telling you to buy more insurance. This is a time that you need to look at an umbrella and figure out if it provides you the financial protection that you need above the limits of your organization's other policies. An umbrella can provide additional protection for concerns such as vehicle accidents, third-party property damage, product liability, libel. When it comes to liability and third-party coverage, don't do it. Look at more coverage in this case. Look at better protection from that side. Maybe take some of the premium dollars that you're spending on deductibles and in retentions, raise those up and move it over to liability protection. Really, really important for protection. Next, protect yourself from employment practices claims. Now, I recently recorded a video on employment practices liability insurance, getting into a hard market for EPLI. We're starting to see it deteriorate on standard lines carriers and move over to the surplus lines. Given social inflation trends, employment practices claims are common. You should consider purchasing EPLI, but you should also deploy proper human resource practices. It doesn't have to be somebody that you hire full-time, and we know that's expensive. There's great services out there. There's vendors that can provide employment practice services. There's PEOs. There's all types of services. We have them available that we can refer you to at a fraction of the cost that it would cost you to bring someone internally full-time. But these services are great. They're going to do employee handbook reviews, workplace policy reviews, make sure that you're compliant. And that kind of stuff goes a long way to protect your business against employment practice matters. You don't want to have an employment practice issue in a time where social inflation is on the rise, juries distrust businesses, and then you have to go in front of a court and hope to win against somebody who the jury's going to feel bad for. Fourth tip, but not the least, partner with a great independent agent. And I say independent insurance agencies because independent insurance agencies such as ours contract with several insurance companies, not just one. In a challenging market, we have the resources to help you navigate, to help you change direction if you need to. An independent agent will strategize with you, will determine the best course of action, will help you build your insurance portfolio in the current environment, in the current conditions. So think about an independent insurance agency. Not to say that captive insurance agencies or direct writers aren't great, but independent agents in general tend to have a better overall grasp of the insurance marketplace. And when things get hard, independent agents can really help. What can our agency do for you? What can Fusco or C&E Associates do for you? Well, we're experienced. We have the knowledge to help businesses in the complex market. Several of their teammates here have been through several challenging markets. We're talking about early 2000s, post 9/11, 2008 to 2010, the financial crisis, COVID. Really difficult. We're ready. We take challenges head on. We can help our clients during the toughest times. Give us a call. Our direct dial is 858-384-1506. That will go to our live receptionist. I hope our videos are helpful. We've been trying to really focus on putting them out routinely. Hit the little notification bell so that you're aware of any future videos. Thanks so much for watching. Stay safe, stay cautious, continue to educate yourself, keep up with the trends, and let us know if we can help. Take care.